pxx, Toronto Stock Exchange, and that ticker stands for Blackpearl Resources Inc. That is a cool name. And look at that nice mountain. Roller coaster ride. And here we are today. All right, what do I do first? Monthly candle chart. That's where I got my alert. Trying to make sure that I'm on the good side of the wind. That's going to blow on my sales, my weekly candle sales. The wind direction. We confirm it on the higher prevailing trend, in this case the monthly. And we cast our sales on the weekly using Stan Weinstein's trading framework. There you go. A few things you could do to help manage your emotions, manage your biases. Put everything. You read stuff on the web, your newsletters, news releases, stock tweets, Twitter, on the pxx, Blackpearl, and then you say, to the moon, or, oh no, that thing's going to fail. Well, all that stuff, your subconscious records it. And then when you try to look objectively at a price chart, you'll be biased. If I put the chart like that, say, oh, look, this is a bottom, can only go up. And if I look at it like this, I can say, oh, look, this is a top. So just make sure you have like all this black space. And when you draw your lines, set your alerts, you could try to reduce the biases as much as you can. Let your imagine see. So right now, these are monthly candle charts. This seems to be a bottom formation. You see, if I'd be using my classic trading framework, back here I would have had a breakout, and I would have had a target reach a few months later. Look at that pinpoint accuracy. It's like a swing rule. Stan also talks about the swing rule, and he mentions the books. He read those classical trading books, technical analysis, and he incorporates some in his trading framework. And they all overlap. Classical trading, technical analysis, Stan stage analysis, and a whole bunch of indicators you might use. Whatever framework, at the end of the day, they're all derivatives of the price action. And that's why I don't argue too much with somebody who's doing technical analysis and he's not using the same indicators as you. There's a lot of overlap, a lot of similar targets, and that's why it's not super important. The trick is to manage your emotion by having a simple system, simple framework that you're able to follow, and make sure you have planned actions for events that could happen over time as the chart moves on. So, okay, this was fun, but now that's a bigger pattern. There's always bigger patterns which encompass smaller patterns, smaller launching patterns that resolve, and then they had candles, and then it looks like another pattern, and they each have their own targets. Smaller patterns closer to breakout lines have shorter targets, higher probability of reaching those possible targets. Bigger patterns have further away targets, further away possible targets with a lower probability of reaching those targets than the smaller ones closer to the breakout. And here I set another breakout pattern, and right here you see on the monthly, right there, this candle, it's breaking out right here of this pattern. And after that, this would probably have an implied move from height to bottom, added on top, probably up to here. And after that, there's room. It's probably going to go test up here, the 185, or it could just go down. who knows what's going to happen. But right near 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's a 1 year consolidation pattern right there. And on the weekly chart, I have the 5-year weekly. This is going to look like a big stage. Stage 2 about to happen or happening. So let's go check it out right now. So we have 1 week before the monthly candle closes. The monthly candle closes. And if it closes above 121, we have a breakout on the monthly candle chart for this small launching pattern. And that confirms the direction of the wind. So let's see. And that wind is upwards. Let's go see on the weekly now. Here's the weekly. And here's my ADX. Stan didn't use it. Adios, muchachos. I have the RSI, not the Mansfield indicator Stan uses, but I still use it as a guidance. Anything going over the halfway mark, going upwards towards the direction of the breakout, that's my confirmation. That adds on to the volume confirmation if there's one. And let's explode that. And the chart breakout. So Stan, what he wants is a breakout above a horizontal line. And that seems to be right here. Don't be afraid to zoom in even more. Oh, it's kind of a... Wow, that is zoomed in. Maybe too much. Okay, scratch that down. So this would be the breakout pattern right here. So right there. It's like right on the line. That's probably why I got my alert. And now I'm setting my alert at 140. You'll say, Pat, why? Why? Well, the Ichimoku cloud. This is overhead resistance. Right now, price action is going to go in, get sucked back in, go back down. You don't want to be caught again. It could not go through, but the wise move is to wait for a candle to close above 140. If you close above 140, you have your close above this nice base pattern. Closer, shorter term pattern would be right here. And off you go right there. Launching pattern, 30-week moving average going upwards within the pattern. It's all good. Horizontal breakout line above the Ichimoku cloud being the last resistance on the way to a stage 2 breakout. And what do we need? We need the volume. Look at that. Twice, over 3 million, under 2, 1, and 500K. So you need the breakout candle has to have twice the average volume of the previous 4 to 5 weeks. And it seems because Stan didn't have this candle right here, the one there. Stan didn't have the Ichimoku cloud. Let's just remove them. He just said use better breakouts. Make sure there's no overhead resistance close by. But what? Close by? What does that mean? 6 months ago, 1 year? Well, the Ichimoku cloud projects resistance or support 26 periods. So on the weekly candle chart, that is half the year. 26 periods, 52 periods. 26 weeks, yeah. So it protects 26 weeks in the future, so 6 months, half a year. And it's all relative to your time frame. So on the monthly candle, it'd be 26 months, etc. And that seems to coincide pretty good with Stan's trading framework. Because right now, let me remove all these lines. Remove all trend lines. Never be scared to remove all trend lines. They disappear, you redo them. And with practice, you get to redo them pretty much in line with your trading framework or the way you like doing them. Sometimes I remember at the beginning I drew them and I'd be afraid that, oh no, I'll never be able to get that same line again. Just practice it. Alright, let's go back. This candle. This is the breakout candle with the... right there. I'm just trying to see if there was even a smaller pattern, launching pattern. Oh. Even make a case for this candle here. Let's go back in time just a little bit. Right there. Well, even this candle here, 500K, 500K, it has twice the average volume of these previous. So right now, if you didn't use the Ichimoku cloud and you were really wanting to go in, you could have had a case saying, that's why the Ichimoku cloud is good, because here, your subconscious could say, let's say you really want to go into trade, that's far enough. That resistance is not really going to be there. And Ichimoku cloud's going to put that. Let's pop it up. Ichimoku cloud's going to show you, hey, that resistance, you're going to run into it a little later right here. So if you want to play the breakout here, good. But there's possible resistance there. If you understand it and you expect it, still not a wise move to go in. Why take a chance? There's a lot of stage 2 breakouts, stage 4 breakdowns, where there's no... the cloud is very thin and there's no overhead resistance. I don't see why you would risk it. You have to put all your chances to get a successful trade. And all these elements, they add up to you being able to get out of that zone, be able to start moving up your sell stops and ending up in the green. So right here, it's starting, you could almost say you had a Stan Weinstein stage 2 breakout right at this level. But it's okay. There's continuation moves. There is, let me zoom that back in. Patterns encompassed by bigger patterns. And like I like to quote Stan, there's always a 40 to 50% move of the stock even before it breaks out. So let's say here the stock was a little bit above 1. And I'm telling you that you should wait until you have a breakout above 140. So that's about 40% increase before even the stock breaks out. And that's what you want. You want the momentum. You want that momentum to build up. And after that, you want a rocket ship with the least chances possible of having a unhealthy pullback. Because that's the other thing. Right now, after we have a breakout here, within 1 to 3 months, there should be a pullback. I've noticed often there's pullbacks to the breakout line. And if that's accompanied by contracting volume, it's a perfect time to add when it gets close to the to that breakout line. And then after that, usually bounces back up and continues and then pulls back. If it pulls back on low volume, it's great. Don't get scared. And then after that, when the price action starts going back up, then you move your sell stop under that point, and so on. So that's how you refine the buying process. And I would put my initial sell stop below that resistance, below a round number, so we could actually, that support, sorry, I do a lot of dyslexia. That 99 cents, that'd be your initial sell stop if you enter here at 141. And that's about it for PXX. Closing in on a stage 2. Just make sure we get above that cloud. And on the monthly candle chart, let me pop it back up. It's already on its way. It's already on its way for a monthly candle breakout right there. Cool. All right. So this looks very good. Let's get back to it. I'll keep this chart open and I'll come back to it in 1 week. All right. See ya, PXX. Ciao.